Bears are out in full party mode, doing wheelies with fireworks flying out of the S&P 500. If you guys recall, over the last month, I had mentioned after we had gone down 3 weeks in a row that the S&P 500 usually doesn't go down a fourth week. Well, the last 2 weeks have absolutely been rocket ships as we've climbed higher and defied every single resistance along the way. Let's go look at the S&P 500 and see where we stand. Well, I'm going to keep it very simple. We're above the 5 EMA, which means that we are in full throttle thrust mode on the S&P 500. Big tech is back. NVIDIA is flying above 120, and we are above that 5 EMA. Now, we can't get any stronger than that. Beneath that, we had the clear and strong bounce back above the 20 EMA, which is bull support. The market went full force. This market has recovered 6.8% in the last 7 days. I'm going to talk about violent volatility in the tech sector. We're going to go over some hot news stories, and I'm going to be going over some plays that I entered into before market close today for setting up a win next week, as well as we're going to keep NVIDIA front and center. It's my #1 swing trade right now, and I didn't sell a stitch of options or shares going into next week. Now, I'll tell you that there is the possibility of a pullback. I'll tell you exactly what I expect to see there in the charts, but if it does pull back, right now, I'm loading the boat in this market. All right, let's talk about violent volatility in the tech sector because a 30-day losing streak was fully recovered in the last 4 days. We know that Warren Buffett's been selling big tech into strength, and we know that others may be as well. Is the tech sector out of trouble? Will we just simply pass all-time highs here in the coming days on strength, or are we going to face more bear pressure as we get closer to the top of this range? The AI story, as well as deep financial pockets during economic tightening, is largely what pushed big tech up. If you combine Netflix with the Magnificent Seven, their PE has an average of 30, which is significantly above the rest of the S&P 500. So there's many that argue that big tech right now is expensive and going back to expensive levels where it will be met with sellers. But the #1 response or point that I want to make to the bears there is that big tech can continue to rally all the way till the Fed cuts in September. And so for those who got too bearish too early, they got out of the game and the stocks are skyrocketing back up. It's why we're going to look at NVIDIA today because we are getting near their earnings. It's a hot stock and I want you guys to see what I see in the charts. This is the Stocks with Josh show. Thank you for joining me. I hope you had a profitable week. We're going to get some rest this weekend and we're going to do it all again Monday morning. The Chart Goat University or the Stocks with Josh Discord was absolutely fire this week. A number of successful trades by me and the Crown traders. Guys, get trade alerts, learn to chart, trade with me and the Crown traders. I'm going to leave a link in the top pinned comment. Get set up for this coming week to win on Wall Street. Check out the link and join the community. Okay, let's just recap what went on this weekend. Q2 earnings was mostly over. 80% of the companies beat expectations, but only 43% beat on revenue, which is a little bit of a warning sign. The market initially pulled back this morning on weak July housing starts. Housing starts and building permits fell to a 4-year low, showing weakness in the economy. That may have been interpreted later in the morning as an incentive on the Fed to give deeper cuts in September. But really, it was after the consumer sentiment report came out mid-morning, showing a greater than expected 1.4% increase, hitting a higher number than expected at 67.8, which simply means, as Walmart showed us yesterday, apparently all of you can afford the higher prices of inflation over at Walmart and wherever you buy your daily goods. Apparently, people are more optimistic in their finances than was expected. Another dynamic that moved the markets mid-morning was a comment made by Fed Goolsbee, who said that the data was clearly flashing warning signs, and that assured the market that the Fed would give deeper cuts. All of that got us the fireworks in the S&P 500, and if you weren't loading the boat and getting ready for next week, you might be left behind because the market is clearly pointed to a V-shaped recovery, and as I showed you the S&P 500, price is above the 5 EMA. As a bull, you can't expect for anything more than that. Now, I want to talk about some hot plays. One of them is Ulta. You guys know that Warren Buffett took a large position, and he's not the only one. There's a number of investing companies that have followed his lead, and it's become a popular stock to follow right now. As a result, it went up another 2% today, adding to its 11% surge since Berkshire Hathaway's announcement. All right, I want to inform some of the new traders what a move towards Alta actually represents. If you've been trading the markets over a decade, you know that Alta is actually considered a defensive play. So when you see institutional money loading up on Alta, it means that they are rotating profits out of riskier stocks into more recession-proof stocks. The basic idea behind Alta is that people will fall back on personal care when they can't afford plastic surgery and maybe bigger vacations. They'll simply do things for themselves to make themselves feel better. This has typically been the case with the company Alta. Alta was a very profitable trade back in 2008, 2009. Both Larry Jones and I talked about it all the time, and we got on board the run-up back then. And so when you see Warren Buffett and institutional money buying Alta, just be aware it is actually a sign of potentially a coming recession. It is a more risk-off play. Let me take you guys into the chart. I have not bought any Alta yet, but I'm going to show you where I'd like to see a pullback. May not happen, but you'll see where it is that I would be looking to take a position. All right, guys, here's what's important for you to see. The other day, the stock price jumped above the 20 EMA, and today we closed above the 50 EMA. Now, if there's any kind of a pullback, a place that would be attractive to buy on support would be 362. But if this continues to move forward like a rocket ship, another area that would be a confirmation of a break higher would be if the price gets above 382. So those are the two price points that I want you to watch. All right, I'm going to get into two more plays here. We're going to talk NVIDIA, and we're going to talk about a trade that I entered at the close here on Friday, Boeing. Now, Boeing's a pretty controversial play because it's not out of the technical woods. It's got technical and fundamental problems. And you've heard it said before, a lot of people argue that Boeing is too big to fail. That it's a necessity from the perspective of U.S. defense and that the government won't allow them to fail. I was not moved by that, even though I think that logic does make sense. We saw that back in the day, I believe, with Chevy. They were also said that they were too big to fail, but the shareholders' value did drop to zero and the company continued on. And the same thing could happen to Boeing, but I don't think that will happen. But what moved me today was the news announcement that the chief of Boeing said that he wanted to cut a deal with the union. So I believe if that deal gets done, it's going to be interpreted by the market as a potential turnaround for Boeing and setting a path for a new future. Now, let's go into the chart. And I'm going to show you exactly what I'm looking at. Okay, what do I like about the technicals right now? One, we had 4 straight months of largely sideways consolidation. We've come back and hit support again, and we've had a beautiful bounce, but the bounce matters what happened. It specifically bounced back above the 20 EMA, which is a pretty good sign. Now, yesterday, the price crossed over the 20 EMA, and today we had a candle close above the 20 EMA. Now, my target is a move back to 186. That's basically what I'm looking to see happen at some point next week. If you didn't get into it, a more conservative entry would be for a pullback to maybe 172. So right now, like that introduction video showed you, it's fireworks and wheelies right now on Wall Street, and people are moving quick, and there are a lot of folks, and their investing is getting left behind. Now, that does sound like classic FOMO. So I just want to advise you guys, whenever you take a risk position, before you enter, consider what the loss might be. So ask yourself, how much of a decline in this position would I be willing to accept before I cut my losses? I do that for each and every play. And I'm very disciplined because it's one of my 4 disciplines to put a stop loss on each play as quickly as I can. So take that into consideration. Any stock that you hear me talk about, for one, it's not a suggestion for what you should buy, sell, or hold. Sometimes I get kicked out when I don't want to, but that's okay. It's part of the growth process, and you will protect more capital and you will make more money over time. All right, the last one I'm going to talk about is NVIDIA. Now, this one has been a payday. It's done every single thing I would hope it to do, and I haven't cut it loose yet because it's deep in profit, and I think it can go higher, and I really can't see a case why it would deteriorate now. I think we could get a slight pullback. We could possibly retest 120, but at the moment, this thing has gotten so far in the trend that I don't see why we won't hit 131. That's my immediate target. Let's go look at the chart. You know that I told everybody I was buying at 96 and 94, which was right in the middle of this big candle. No, I didn't catch the bottom, but I sure am happy with what I got. We came back and back tested right above my entry points. Once again, we are over that 5 EMA. The stock price is on offense. We are charging towards the end zone, which I've defined as 131. Now, I think that it's a little bit of a fake out. Now, how we interact with 131 will ultimately determine whether or not this thing's going going all the way back to 150, which is a possibility. So this is an example of something I talk about all the time, which is holding your winners. You can get a lot of plays wrong. You can scalp options all day long. But if you latch yourself to a truly strong winning play and you hold it through the storm, it can be your biggest payday. Those are my biggest winners. And right now, holding NVIDIA over the last 7 days has outperformed any other scalp or swing trade I've made. Guys, hopefully this helps you. I can't trade for you. I can't advise you. I can simply show you what I'm doing. And I'm excited, looking forward to this next week and seeing what NVIDIA might give me. And as I said, we could pull back to that 120. It would not be bearish to me. We'd still be above that 5 EMA, rocketing forward. And you'll just remember that Josh is there with the visual in his mind. I'm on the motorcycle doing wheelies, and there's fireworks flying. Let's see what next Monday brings. Of course, we could get, some crazy news this weekend. We'll just have to deal with it. We'll have to react to it Monday morning. Hit the like and subscribe, and we can react to it together. Check out the Chart Goat University. I'm going to be dropping another micro class this week. I want to remind you guys, it's not just about following a trade. It's learning how to trade. You can learn to chart with me, and you can find out when I do get out of my NVIDIA position, because the Stocks with Josh community will be the first to know when I take profit. Take care. Peace and blessings. Have a restful weekend. Talk to you later.